Good day, good morning, good evening, good night, wherever you are tuned into the BitLab daily stream every day, Monday through Friday, 10:30 a.m. Eastern Standard Time. Let me know if there's any issue with any sound, audio, visual. I had to completely reset. As you can see, I'm back here at my upstairs sort of area in my duplex here in New York. So I'm not in the BitLab studio, but I will be getting a screen next week so we can have a more BitLab-y looking thing. So we're not. Also, so when my wife's here, she's not having to hide from the camera and not be upstairs when I'm streaming. So big love to everybody. I hope you all are doing well. I am so excited to be back. I love everybody in Atlanta. It's such a good time there, but there's nothing like your own bed, your own place, your own kitchen. At my own desk, back in my own home. So happy to be back. That doesn't mean the work stops. The markets still go. The market's still going. So we got to talk about that. We got to talk about what's going on. But I'm going to shout out, not only we're going to be doing, obviously we do the newsletter. If you sign up for the newsletter on bitlabacademy.com, then you do have the ability to be to vote on some of the content that's on the following week, where I'll do a focused look each day at a particular coin, and you can vote on that on the newsletter. Signing up for the newsletter on at BitLab Academy. Let me go ahead and pull that up. But you can also, and that's right here, coming over to bitlabacademy.com, signing up for the newsletter. You get entered to win a free month access to the courses, and the indicators. But one of the things I want to do is I want to incentivize people to be here early as well, because I want to dedicate the last portion of every show, the last 10 to 15 minutes, to different coins that you all want to see, basically do TA and break down and price targets. And not only do I just do the TA, one of the things we do here on BitLab Academy is on the daily streams here is I really like walking people through how, why, what, and where, understanding the concepts as to all these different, how you utilize the tools, what they mean, what they are, as well as walking through doing the TA on these different assets. So right now in chat, you're all here early. I'm going to only do this in the first 5 minutes of the show. So go ahead and type in the comment section right here, get in chat. And before you do that, hit the like button. Hit the subscribe button, ding that bell. We have about 60% of the people that view are not subscribed. Join our family, join our community. You got a wonderful vibe going here. We break down a lot of different concepts, not just me talking to you guys about what's going on. The whole point about this is really trying to bridge that gap from beginner to pro. So let me know in the comment section if you're watching here on BitLab Academy daily YouTube. Shout out if you're over at Hit Network as well, because this is restreamed there regularly, afterwards. But shout out in the comments the coins that you want, that you'd like to look at today. I got the mods in chat are going to be taking a little list, and some of the most popular ones or most common ones posted, I'll be getting a list from, and I'm going to try and do, between 5 and 10 every show towards the end of the show. So all of you that are tuned in, all of you that are watching later, or you tuned in later and you're trying to catch up, that's wonderful. I welcome you here. I do want to incentivize people to be here early and live and on time. So go, and this is a good way, for you to, if you have particular coins you want me to look at, get in here early and join the community. Because again, this is not just about me talking at you through the computer screen about, just what I'm seeing in the charts. It's really about breaking down and helping you have a deeper understanding about what's going on in the market. So I will say, if there's any mess ups today, I have a completely different setup I've had for the last month. So I apologize for that. But for everybody that's new here, my name's Kelly Kellam. You can find me at Kelly Kellam, which you can see right there under my name, Keloy, Kellam, on Twitter and other socials. There's only one Kelly Kellam. There's a lot of fake imposters out there. So that's one of the reasons why I do like to point that out. Make sure you check out bitlabacademy.com. Those are all the correct socials for BitLab Academy. Twitter is at Academy BitLab. So is Instagram, and then YouTube is youtube.com/at BitLab Academy. So without any further ado, I'm going to ask, how's everybody doing? How you feeling? Wherever you're tuned in from, I appreciate you being here. This is meant not just to be something that if you missed it in the morning, it doesn't necessarily matter, because the prices might be different, because in every stream I break down concepts and strategies and try to show you different tools and tips and tricks and really get you that deep entrenched sort of knowledge and just understanding what's happening in the market and how you can navigate it and the tools to do so. So Let's go. Let's go ahead. We got to do, as Crypto Maxi said, I like to do at the beginning of every show. Let everybody in chat, even if you've done it before, it's okay. We got different people in here all the time. So let us know where you're tuned in from. Let us know what your born on date was. What was the first month and year that you bought, and what was the asset that you bought? If it was Bitcoin or Doge, don't worry. We all start somewhere. If you start with Shiba Inu, at the end of the day, I used to have my own feelings about those different meme tokens and stuff like that. And I'm not really going to be focusing on doing TA on those, but I will say I don't really harbor any resentment towards that like I used to. I feel like I realized I was a little immature to have that judgment against somebody, because everybody gets a seed planted from somewhere, and it might not be from a Bitcoin maxi. It might be somebody that's made a lot of money in some meme token, and I'm not pushing that at all. I'm just saying we have to be accepting of everybody and realize whatever was the incentive for somebody to enter the crypto ecosystem and help strengthen this ecosystem and be a part of the crypto community as a whole. I don't care where they entered from. I just care that they're here and they want to grow. So let's go ahead and do that. Let's grow together. Let's go ahead and jump into the charts. So we're going to go ahead and look over here at the screen again. Make sure, again, I'll be sending out this weekend, sending out this newsletter, free alpha, breaking down some charts, breaking down some ideas, also letting you know updates about all the new content coming to BitLab Academy, which I cannot tell you. That's what I was in Atlanta filming this whole last month. Right now, we're just got the editors working tirelessly to get all that done. And if the indicators that I break down when I'm doing the technical analysis is the BitLab trading stack, you can come over here to bitlabacademy.com/indicators. We still have these pretty heavily discounted for the whole stack. You can get basically get a bundled discount on these. I think that's it with that. Let's go ahead and look at the markets real quick before we dive in. There's a lot of stuff we're going to be looking at. We got some great charts. We got some on-chain charts, some technical analysis charts, looking at some different assets. We have this looming sort of question. Is this rally, is this bull market rally going to continue to the upside? Is this rally, do the bulls have the strength to continue to the upside? Or is there an impending, an incoming sort of Bitcoin crash that's going to come? And if so, we've talked about a lot on this channel where those levels could be. But that being said, back to these charts. Bitcoin's coming in right today. It's February 24th, 2023. I cannot believe we are living in the future. It's just like yesterday. I feel like I was writing my name and date on a piece of school paper, on the top right, and it was 1995. So time has gone quite quickly. So it's $23,500 for Bitcoin, to $1,600, a little over $1,600 for Ethereum. USDT still at $1, which is, of course, that's a good thing. BNB 305, XRP 38 cents. Now Cardano is now below XRP again at 37 cents. We will be breaking down XRP in a little bit more of a focused manner today, so you can save that if that's one of the ones that you wanted to request for me to do, because I will be doing that, because that was the fifth most requested in the newsletter where you all could vote. That's why I want you to get in the newsletter so you can help shape the content here on the daily streams as well as in the newsletter. And XRP was voted as the fifth one. I did what did I do this week? I did XRP. I did Cardano, XLM, Filecoin, HBAR, and then today will be XRP. It's of course also one of the ISO 222 coins, basically cross-border. Not subscribes, that's the word I'm looking at. It complies with the cross-border payment regulatory sort of standards. Then we got Cardano at 37 cents. Polygon still high, but has come down quite a bit. $1.31. And we'll kind of leave it there. But we have some things to look at today. And before we just jump straight into that, have you come over here to the Academy BitLab, the BitLab Academy Twitter page, and come here. Great way to support the community is not only hitting that like button. If you haven't, hit that like button, baby. Hit that subscribe button, be a part of our community, ding that bell, and then come over to the BitLab Academy Twitter page and share this post. Get more people in the know about crypto, not just, because there's so many things that we think about the stuff that you know in crypto, even if you don't feel like you know a lot. just by being in crypto for a couple weeks or a couple months. When you first start watching the streams of people doing TA, it sounds like another language. And so that's one of the things I'm really trying to change. I don't want to say change, because all there's so many good channels out there, but I'm trying to create that more accessible avenue that's still giving great alpha. So whether you're a beginner or a pro, and that's why I recommend come over here, retweet these when we do this these promos in the morning for the daily stream that's about to happen. Get more people involved. That's how we do it. And then of course, come over to my Twitter profile at Kelly Kellam. Follow me there. And then now we're going to jump in. And one of the things I want to look at right here is this is a new bull or just a bear market rally that won't last. Well, and this is Jurrien Timmer. If you haven't followed this gentleman, follow him. He's incredibly smart. Great content from this guy. Really just macro strategist and monetary character within not only the crypto Twitter space, but he's just kind enough to share a lot of the things he finds here. And we can see that if we just look at 2022 price last year as compared to 1946, we can see that this push up that we had on this, basically this daily data that we have on this, is showing this sort of pullback that is tracking very similar to 1946. So what we need to do is we need to look at all the data present. Even if you're only trading in Bitcoin and crypto, we got to look at the other data, the context of the broader markets, to understand, to get a clearer picture about where that appetite for risk on and risk off behavior is, so that we can make sure that we are trading with the trend of that sort of narrative. Because you might have a pump on an altcoin, or we might get a pump in Bitcoin like we have, but that doesn't mean all systems go full throttle all the way to new all-time highs. That may be a bear market rally, because if we look at Bitcoin, even on this trend right here, just looking at this trend right here, we had push down. We had bull market starting again. No. Bull market starting again. No. Bull market. So we have to be patient and letting a trend develop. What's crazy is I hadn't seen this yet because I was setting up for this stream, but I put this line here today because I was going to talk about potentially if Bitcoin breaking out of this, because this mimics a different pattern that I'm going to show here in a little bit. But I just want to point out that we need to be conservative when we are in these stages of early accumulation, which I hope and think we are, of a new bull market, but we haven't fully established that yet. And that is this stage right here this choppiness. This is when the markets try to shake the most people out as possible. Okay, so we need to be very conservative about when we choose to put all our chips in, especially if you're not doing it in a smart way, which down here should be on spot. And then once we have spot trading, meaning non-leverage, non-margin trading. So we're doing this conservatively, not exposing ourselves to more risk than is necessary. And then once we break out, confirm, and then really not only just confirm, which if we look at just this level, we have, right? But if we look at just this level, the push out, breakout, retest this as support. If we look at just this level, if we come back out to the 3-day, we've done this, okay? But there's a lot of looming overhead, completely different circumstance, sort of nature and environment that the market is in right now that should force you to just be very patient about letting the setups come and develop and really finding when the momentum starts kicking back in gear, going back to the upside. Right now, we've had the kickstart, but it's kind of like if you've ever seen somebody ride a motorcycle that it's a kickstart or even a lawnmower when you're trying to pull start it. When you do the first pull, it is, this is kind of what's happened right here. I'm going to turn off this, turn off that, there we go. That's kind of what's happened right here. We kind of got and we feel like the engine started, but then right now it's kind of sputtering out. And the reason I say this is if we look at this measurement right here, if we take just a trend line from here and we put this up right here, look at the difference in momentum. We had a momentum breakout of this sort of zone right here. We had a momentum breakout, meaning that we can see the candlesticks getting bigger as they're rounding here, and they're getting bigger. And but this entire move was, this was, if I click shift and click on the chart, and then come up, that will give me a measuring stick tool. Had a 46% pump. And then the follow up to that was a mere let's see, 15% pump. So we can tell that the momentum, the bullish momentum is not following through. In addition to the bullish momentum not following through, we're starting to, if we look down at, like, for instance, the 12-hour, we're actually starting now to attempt to form a lower low on this shorter term move. So we can see in a sort of just very simple look at the market just by reading the momentum and where the next higher high, we had this higher low from here up to here. And now we have a low here, and on the smaller time frame, we're starting to break this. And not only that, what is the level that I pointed out over the last week? I pointed out this level specifically with this orange line. This has been here all week. This is a $23,400 level, and this has actually broken through this zone. We can tell this is broken through because, as you know, with candlesticks, which is each one of these bars, each bar that we see is representative of the time frame that you see that specific chart is. In this case, we're looking at the 12-hour. Let's go ahead and go down to the 4-hour. We'll get a little better resolution. Okay, so this wick is how far this candle has traveled down, but the bulls have eaten this price back up. So the bulls are trying to make an attempt to not let this continue down. And this is because we have this key level here, which is also previous high on this sort of local zone, this smaller term time frame that we're looking at here. So we are having some orders that are being filled, some buy orders that are coming in here. So now what we wanted to see is this going to continue up? Well, we're going to dive into this more in a little bit. And Alex and Crimson Caravan and Alexander G, Matt C, shout out to all my mods in chat. Karen Swigart Harris, how you doing? Crypto Maxi, who was the first one in here today? Crypto JMP, how you doing? Good to see you. Mr. Redbeard 59, Mike Volomir. Man, we got such a good community here. I really appreciate everybody being here. And you guys, just so you know, yes, I am in New York, and yes, I did wake up at 3 a.m. this morning in Atlanta and fly here. Got home just in enough time to reset all the the camera, the different lights, my monitor, all the cables, screen changers, Stream Deck. So I'm happy to be here, and I'm happy you're all with me. So if you like this kind of stuff, if you like the content that we do here on BitLab Academy, and you just love crypto, or you absolutely hate me, no matter what, hit that like button. Please subscribe to the channel. Join our community. We want to make this community stronger and really include everybody in it. So let's go ahead and go through some of the things I wanted to talk about. Then we'll do a bunch of TA on a bunch of different stuff. And those that were here early, you posted your coins, different projects you wanted me to sort of try and do towards the end. Alex, if you can, what? Yeah. Sorry about that. I get sidetracked by trying to read the comments and stuff. So it's nice to have, we've got a nice little organization with our mods now where they have a direct line to me in Discord, and but if you guys can pull some of the common coins that people requested at the first 5 minutes. And if you weren't here the first 5 minutes, it's a good reason to be here. First 5 minutes of the stream, you get to make some requests. I'm going to try and hit as many as possible. Just send me a list in Discord, Alex, and I'll take a look at those in a few minutes. But what we want to look at here is, we're seeing a bit of ingredients. We're not seeing the ingredients for a full bull market yet. So although we were seeing that this had broken out, looking at this larger time frame, this had broken out and is pushing up. As I mentioned, we had smaller amount of momentum on this next push up, and we're beating our heads against this level right here, which is this previous high. The easiest way to determine levels, just as a beginner, if you're looking at a chart, we can actually come over here. We're just going to go to it doesn't even matter what the chart is. Let's do Sol. Basic way, we're going to clear all drawings. Basic way, just to start, is you can come up here to the very top, the all-time high, and on your keyboard, press Option J. If you're on a PC, it's Alt J, and that gives you a horizontal ray from that level. Now, the next major peak, this is kind of an interim peak. This is the next major sort of relief rally right here, which is when you have a downtrend and you have a small bullish impulse up, which is what this is. This is known as a relief rally. You can mark that level there, and then we can mark also regions by coming over here on the left toolbar and coming, where is it at? Where the paintbrush is, you can come down to rectangle, and we see that there's a lot of interactivity here and then all through here. So we can kind of just draw in whatever color you want, draw just basically a high interest zone, essentially is what I'll call it, because we have rejection here, we have support here, we have rejection, a lot of price playing throughout this, rejection. So we know just above us right here, just based on where price action was previously, we start to get our basic map. And so that's just something you can start with if you're newer to TA. So we're going to come back over to Bitcoin, and do you see I have a bunch of different versions of the same chart with a bunch of different TA drawn in different ways. And look at this. This is the find the murderer chart here. This was just an experimental chart I did somewhere about right here, just doing a bunch of spider lines and projecting where price action could go. So I think right here is when I stopped and I just projected, and all the way down, this has had a lot of interactivity of where price was interacting based on what price action was doing up here. This was just an experiment. I don't usually share that one on stream. I don't use it to do TA. But coming back to what we're talking about, we have this push out, but we still have all this looming bearishness overhead. So, we're having setups on just traditional assets. When we look at the era of easy money, as a lot of people call, like especially 2009 on, after the market crash in 2007 into 2008 when it really happened. This is a housing market crash that really it just decimated a lot of markets, and there's so much unemployment in the US, and it was a very bad sort of time, and so there was a lot of quantitative easing. And what is quantitative easing? Quantitative easing is when the US government is just printing money and they're just pumping money into markets. So we see when we look at the traditional assets, and I need to come over here, I'm going to come here, boom, here, and we're going to look at right here, traditional markets. And if we look at the NASDAQ, for instance, if we look at this on the weekly and zoom out, this is, where's 2008? So 2008 is right. This is a crash in 2008. So this was a pretty significant, this is 60, almost 70%. This is a crypto crash in stock market. So when people talk about the volatility of crypto assets, just point them to the stock market in any periods where they've actually had a bear market, and then remind everybody that argues about crypto's volatility, the reason that we have these incredibly strong, this is from here all the way up to, this is a 1,100% gain in the NASDAQ, and it took several more years than it would in crypto. But we're seeing the reason we have this massive push up and then also, again, this massive fall is because these markets are manipulated by money printing. We have quantitative easing that came in, meaning that we have money printing coming in, and there's money being injected into the markets, buying different stocks, putting things on their balance sheets, basically stimulating the economy. And so we see this very strong uptick on the NASDAQ. That's basically falsely inflated bull market. Now, in addition to that, we've seen a strong correlation. It's not always going to be, but there's a strong correlation between traditional markets, especially, look at the NASDAQ and the Dow Jones, and you see, Bitcoin's just basically up and to the right with the volatility pullback. The bear market sort of resets along the way because the bull market's got so out of control. If you go up super fast, you're going to come back down almost just as fast. This is why it's okay that we're not just rocketing to the moon, because if you're rocketing to the moon, then you're also asking for a lot of people to get wrecked, because as soon as it goes up and it gets back up into these levels, I guarantee you we're going to see a huge sort of hype cycle increase. And a hype cycle is when the retail gets in and they're buying because they're hearing about it on the news and they hear other people making money. You don't buy something because you heard other people make money. Because if you're buying at the point that you're hearing a lot of people have made money, that means you've missed your opportunity to make that kind of money. in terms of where you're at in the market cycle. Now, market cycles reset, and in this case, this is reset because we've gotten these accumulation zones. And so while we're still in these areas, you know, anywhere below this macro resistance is really, I mean, really all the way, I don't want to say as high as 42 because this is a golden pocket from this entire move, but anywhere in this region below 29,000 is really the best opportunity. And the lower you get down here, the better opportunity, but the lower you get down in these prices as well was likely felt more risky because you don't know if it's going to go lower. So you have to rely on your on-chain data analysis, your technical analysis, your understanding of market cycles, the correlation with what's going on globally, and all these things help paint the picture of when you are going to take your shot to find your entry. So if we have these bearish things, if we have the bearish sort of nature of what's going on in the markets, we had the PCE come out, which wasn't great today. Inflation looks like it's not coming down as fast as everybody just had resolved to think it was, you know, over. No, this is going to be an ongoing thing for quite a while. And so we can see here the era of easy money printing easy money is over. And this easy money is directly from, and I'm sorry about that little wormhole, that rabbit hole I just dived down, but it all ties back to this. It's just the era of easy money. Hold on one second. I'm live streaming. Okay. What do you need? Sorry about that. New York City, somebody had to knock on the door and ask the locksmith or something. So we see that this is the back in New York, baby. So the era of easy money, this easy money we're talking about with markets just rocketing, very, very strong economy with the markets just pumping. Well, this is tied directly to this idea, this era of easy money. It's easy to take a loan because there's not high Fed fund rate. If you're wondering why that matters, what the Fed fund rates are, the reason that matters is because that there is, it's easy to if the Fed interest rates are high, it costs more money to borrow money. Therefore, there's not as much capital available for businesses to develop. There's not as much funding available to basically operate, in this debt-based system, unfortunately, that we operate in. So this is where the Fed fund rates are, and we can see Fed tightening has caused domestic banks to tighten, therefore meaning the loans aren't as easily free flowing, and it's reducing the amount of liquidity that's available to come in the market. But with all that and this entire setup, this is why the market is so confusing right now. The market is so confusing right now because we have this sort of nature. If you look at the historical trend of what's going on with, if you look at the historical trend of when basically the easy money trend, when the Feds pivot, the Fed fund rates, how it's going to lead to a recession, so on and so forth. This has been a historical thing. We've talked about this on this channel. Well, we've never had this global economic shutdown, followed with, the global health crisis that regardless of what you feel like, whether it was true or not, or if it was manufactured, all that doesn't matter. The world shut down and the economies have not yet recovered, and they're still trying to figure out how to weigh the data that usually is very bearish and very bad looking forward. However, how do we balance out with what's going on? Because if we see this, it looks like we're likely going to have a very, the recession is a definite thing, and we are going to see liquidity pouring out of markets. But if we come over here, we look at this. This is from the Rational Root. I love this guy's analysis. I'm going to make it my mission to get him on the show and talk about some charts and some metrics and stuff. But what this is this is a global liquidity. And what I want you to notice when looking at this is looking at this level right here. We talked about this yesterday with this chart. And this chart specifically had more to do with China, the Chinese money supply, the Chinese basically doing quantitative easing, printing money, injecting money into the markets. And hopefully, if we look at this, where we're at right now, this is kind of leading to, I don't want to say it's leading to, we can see a correlation between this going up, leading when Bitcoin started to pump. Now, if we look down on the green line down here, the green band, this is the U.S. money supply. supply. If we look at the same thing, we're flat and actually we're actually reducing here because we were in this quantitative tightening. Now, if we scale back over here and we look, let's look at March 2020. The Chinese money supply was effectively flat at this point, and it took them a little longer to flip this on. But we can also see the U.S. money supply started ticking up right here as well. And as the money supply from China and the U.S. really started to pump up through here, we also see fuel and liquidity for the markets. You want fuel for bull markets. If you don't have fuel, then that is essentially the inverse of fuel for bull markets. No fuel, meaning no liquidity or reducing liquidity, is literally like taking pistons out of an engine, taking the gas out of the car, taking the wheels off the car. The less liquidity you have, the less round the wheel is and able to roll. So if we look at the actual global money supply, global liquidity, not just the Chinese money supply increasing, we can see that this is a fairly steep increase here. This is the Fed, the European Central Bank, the People's Bank of China, Bank of Japan, Bank of England, I believe. I don't even know what the rest of these are. But we're seeing that there's a lot of bullish pressure that's coming in. So I don't want to say this time's going to be different, but we just have to acknowledge that the data sets that we're using right now are different, and we have to take that into consideration when we're making our determinations. And this is not just with looking at, okay, things are looking bearish, so things are different though, it's all going to resolve, we're going to go to the moon. That's not what I'm saying whatsoever. This goes not only for liquidity and inflation and Fed rates, but this also goes for Bitcoin. Okay, this broke out of a bullish descending wedge right here, as we have here, which is, we played out for basically since November 2021 all the way until January 20 this year. But we have done what we know is flipping this bearish resistance to support. So we should be looking for that next leg up, and we're getting rejected. Well, why are we getting rejected? Well, we're having liquidity come in, but this doesn't just have an immediate impact on crypto risk on markets. We need to have some liquidity also come into the risk off markets, and also the traditional markets first. And we can kind of zoom out on this and look. We can see right now the Dow Jones is pulling back. Luckily, we have this sort of large trend line that if this doesn't hold, then if this doesn't hold for the Dow Jones, I think it's very likely that we're going to have further downside for Bitcoin. And this level would be, if we zoom in on this, we're currently at 32,700-ish, 32,692, and this level right below us is 32,589. If we lose this level, come back, retest, and just so you know, with stocks are a lot more, traditional assets tend to follow the framework for what we see when we see the percentages, when you see pattern breakouts, and the likelihood, that's where those percentages come from, is stocks. And the likelihood, if this were to break down, it's very likely that this will come back up and retest at minimum before it continues to the downside. Crypto doesn't always do that because there's so much more volatility within it. And I think there's a more heavy sort of contingent or percentage of players within the crypto ecosystem that don't trade on like very tuned in, healthy perspectives on the market. There's a lot more emotionality and retail sort of movement within crypto. But if we lose this level with the Dow Jones, and then we come over here and look at the NASDAQ, we're going to zoom in now a little bit smaller time frame. Let's go down to the 4 hour. We have a similar sort of zone here. This is, I'm going to do another line here, Option T on your chart. Rather than coming over here on the left, you can press Option T on a Mac or Alt T on a PC, and then click on the chart, and you'll have an immediate trend line rather than having to use the toolbar. I'm just trying to see if there's a similar sort of trend line that we had on the. Okay, so this is a little bit ugly, but we have 1, 2 touch points. This did kind of fake out above, came back down. I'm going to double click on the chart and minimize minimize those indicators on the bottom. And we could see interaction here, rejection, a little bit of a bounce here. And so there's a lot of interactivity at this level here. But the caveat with this is looking at NASDAQ, this is the 4 hour. Let me look at Dow Jones on the 4 hour. That's a 1 day. So, okay, this is two different patterns. This was more of a symmetrical triangle. This broke down. I would love if this found support here with the new liquidity coming in over for the next week or 2, 3 weeks. Having this find support in this region and bounce would be incredible. But looking at the NASDAQ, I do want to say we have a more bullish sort of stance on the NASDAQ because we can see we have a descending wedge here. And we tried to break down below this, but we have a descending wedge here that if we do find support, see again, conflicting signals between the Dow Jones and the NASDAQ, one being more risk off mentality, one being more risk on. But what the key asset we're gonna look at here, and then we're gonna jump into a bunch of charts, is here looking at the US dollar, the DXY, the dollar index. And we can see now on this, we have this is a bearish formation here, pointing to the upside with an ascending triangle, I should say, not ascending wedge. And this is breaking to the upside. This has to do with, the report that we got this morning, I believe. I think, was it this morning, or I was flying this morning, so I didn't get to do a lot of TA before I hopped on here. So was it? Yeah, so this is this morning. The PCE came in. I'm gonna go to Forex Factory. I like the layout of Market Watch much better, but the Forex Factory has better data, I feel like. So PCE, here we are. So PCE, so the expectation was 0.4. We came in at 0.6. This is what the market is absorbing today. So the market is absorbing, as you can see, the middle line here is the forecast. The market is absorbing that the personal consumer expenditure, or I think that's what it stands for. I always get the acronyms confused. So this metric is showing that the inflation is coming in, looking at the consumer side of things, that the inflation is still sort of sinking in a little bit. But my sort of caveat with this, though, my question about this is, I know that the economists had sort of changed the determination, changed some of the numbers in January in terms of what they were measuring and how they're measuring inflation. So I'm gonna have to look into this. I'll get you an answer on Monday. That could have the impact of why all of a sudden we're seeing inflation go up. I will say yesterday, while I was in town in Atlanta, I was borrowing. I'm staying with TJ from BitBoy, his father's house, who also works at the Hit Network, and I was driving a car that they had for me. And I was like, I'm going to refill the car for them. Mom always teaches you, before you return something, send it back better than you got it. So, I took care of the car, and I was getting the gas filled as well. And I was excited to get gas because the day before I saw gas was $2.97. And I hadn't seen it below $3 and I don't even know how long. And then when I went to fill up, I must have gone to the most expensive pump that was in Atlanta, because it was only, half a mile away from where I saw the $2.97 gas, and the gas was $3.82, almost $1 more. So I don't know, I don't know if that's an indication that inflation is spiking again, or if I just picked the worst gas station to go to. But these things, we need to pay attention to these things as we're moving around and seeing the cost of goods. And then when we see these numbers, does it make sense? Does it not make sense? Are things being manipulated? It's good to take care of all these things. Now, jumping back into the dollar index, we see this rallied off that news. If we look at the 1 hour chart, we can see this was already pushing up. But if we see this trend line right here, as soon as we broke this, it's kind of off to the races. And then on this next candle, this is when the PCE news broke, the inflation higher. Likely there was a little bit of a leak there, seeing this sort of run up. But the question now is this going to sort of roll back over? Because this is a bearish formation with this ascending triangle as we have it. But let's go ahead and look at Bitcoin really quick. And I did it again. Yep, I did it. I didn't do the charts. Yeah. Well, I have a new setup, so thank you. Hey, hit that like button for me to get the charts up every time I'm talking about them. Hit that like button, hit that subscribe button, ding the bell. I really appreciate and love all you guys. We're going to do a bunch of TA here for the next 20 or 30 minutes. So, you know, we may not cover it, but throw in chat the things you've been DCAing into lately. Throw in chat things that you're excited about, but you're waiting on a better price. You should have something. Should have something. I see. I can't see the preview screen, so should have it. Okay, got it. Awesome. So let's continue on here. So we're gonna. This is just a basic look to start. We're gonna start with our macro, midterm, and then micro, and then we're gonna go through quite a few charts. We're gonna do Bitcoin and then XRP, and then we're going to do, what else did VET, crypto. Sorry, we're gonna do Bitcoin, XRP, VET, Algorand, and a lot of, if we have enough time, we'll do Cardano, but we did Cardano again earlier this week. So we have the macro trend, downtrend. We've broken out of this trend. We're trying to flip support to resistance to support, which it looks like we've had, but we're not having follow through, and follow through is important. We have the golden pocket directly above us from this from this level down to this level here. And in order to get this Fibonacci on your keyboard, if you're on a PC, you can do Alt F. If you're on a Mac, you can do Alt F. You're going to click at this level, right at this high, and just move your mouse down. You don't have to continue holding the button. Come down to this level here, and we can see this low here, and we can see that this level right here. Let's see. Yeah. Do it. Sorry about that. I'm doing it from this level right there. We go. I knew it was a little off. So we could see that this level right here was also ends up later being the golden retrace. That hadn't been established yet. But we can see that from this entire move all the way through this entire sort of this entire price action not only rejected off of this high, but this high is also a stronger confluent price action point because we have this golden pocket that's right at our head as well. And this is a regular spot the price action moves up to and then breaks down from. I'm not going to go through it right now, but you can go back in history and look at even look at 2017 when we had the blow off top and the consecutive bounces, and you trying to figure out how you could play it. Do fibs from the top and bottom of each one of those moves, and you'll see almost every one of those bounces goes right up to the golden pocket, which is this 0.618, 0.65 zone right here. And we're getting rejected off this. If we look at our BitLab indicators here, look at this. Had you been using this signal or even traditional signals, this flag right here is essentially pointing out bearish divergences. So if you're looking at MACD, stochastics, money flow, momentum, all that, this is the BitLab Market Intelligence looks at all those for you, and it shows you that we had 6 bearish divergences at this point, right at the zone that we are hitting this golden pocket. And this says, hey man, maybe you should be getting out of a trade, or maybe you should be taking a short. This is just one of those signals. And then we get this followed up with the bearish divergence on the hidden volume, as well as seeing that this was blue right here, which shows trend bottom. And what happened on this pullback, we got a bottom, and then we push up, and this turns back red and confluent with the bearish divergence on volume, and one MACD, RSI, stochastics, on balance volume, money flow index, hidden volume, all of these bearish divergences. This is as clear as a signal as I've ever seen on the BitLab Market Intelligence, BitLab Hidden Volume, BitLab Relative Extrema, and BitLab Significant Movement. All of these things are in agreement that that this was overheated. We can even see on the Relative Extrema that going into that move, that these extrema bars were sticking outside of this shaded cloud. The shaded cloud is a sort of, essentially, it's like, think of it like the healthy zone. And anytime you have price action moving too quickly outside of a zone and doesn't have the support that it needs, you get these bars outside of the cloud, or in this case, on the complete opposite side of the cloud. So as we can see, this was a clear signal to pull back. However, on this move down, one of the things I'm seeing right now on this moment, we're looking at this, we're on the daily, we can see that this is moving down, Now we're pushing in. We have this EMA ribbon of support below us. Now, what I want you to notice is we have the relative extrema on the complete opposite side of this cloud. So are the institutions, are the smart money players trying to commit people to going short right now so that they can reverse this back to the upside? Well, we don't have all the signals yet to confirm that, but we are right now, we can actually come to a smaller time frame. We are pushing down into a zone of support that we have right here. We have a little bit of bullish. We finally have, after all this period of time, look at all this bearishness, all these are bearish divergences on the hidden volume, showing that there's bearish sort of interest in this space, okay? More so than bullish. Even though we get this impulse up, there's a more dominant bearish narrative on this space. And we do see finally we get a bullish impulse here, a bullish div on the hidden volume, but we also we're getting a blue floor signal right here, which essentially says that the stochastics have reset. They're down at those underbought levels. The momentum is down at those underbought levels. We're having the RSI is reset. We're basically all your momentum indicators are showing that that you likely, it doesn't mean that the price is absolutely going to stop falling, but it's showing that those momentum indicators are resetting and that we are starting to get a little bit of a buy zone here, or a little bit of a bullish sort of signals to come in here. And now we also see we have bullish MACD divergence, bullish RSI divergence, bullish stochastics divergence. You have all these right now. In addition, just following the bullish divergence on volume, and the relative extrema is sticking out of the cloud, as we can see right here. So this is starting to look like there's going to be some interest from the bulls to come in. But what we have to do is we're going to come down to, we're going to divide this down. We're going to go down to the 1 hour. We have, okay, the bulls have eaten up a lot of this wick here. The bulls have eaten up a lot of this candle, meaning that the bears we're starting to see are losing momentum to the downside. This isn't a sure thing yet. We have to let things stack up, let things develop. We're getting a larger blue wave here as well, showing this a stronger indication of possibility of a trend floor, a very small time frame trend floor. So now on the 1 hour, you saw how we started on I think we were on the 3-day, we went to the daily, we looked at the 4 hour. Now we're on the hour. Let's go down to the 24-minute. Similar sort of narrative. Is getting a little more unclear here, although the candle is on this one candle, we're getting a lot of movement to the upside. So let's break this down to the 15-minute. Okay, now we're actually closing. Now we close that candle and we're actually opening in the green, which is nice, but we need to kind of, okay, this is starting to look a little weak. So we want this next candle to close, and we don't want option F to pull a fib. We don't want this candle to get all the way up, which we kind of already have. We don't want this to get rejected at this golden pocket on this small move. If we get rejected on this golden pocket on this one candle move on a 7-minute, and we're testing the low, it's showing the weakness is still there in the bears. So as it stands right now, I think that we need to see how the markets throughout the rest of today, how the markets sort of take in the data that we saw from the PCE, the inflation numbers kind of coming in a little bit higher. I think it's likely that we will have some attempt to push it lower. It's going to be interesting to see what happens over the weekend, however, when there's not as many institutional and smart money players that come in. By the way, I'm looking right now at about 45% of you are not subscribed to this channel. Subscribe, join this community. We've got a great community. We break down charts. We talk about different concepts. We break down on-chain data. We go through it all, try to bridge that gap from beginner to pro. Hit that like button. Join our community. We're building it here, man. We're going quick, man. We've started about a month ago. We're over 4,000 now, so let's do this. I'm bringing you that data in an understandable way. That's my goal, at least. And if I'm not, let me know. Let me know some of your sticking points in the comments. Let me know what you're thinking, what you're feeling, things you're having issues with, things that you've been trying to dominate in your charts that you're not able to do. I read these comments so that I can tailor the content for all of you here in the community. So shout out to all of you that are here in the community. Now we're looking at here, we want to get a determination today what we're going to do. The problem is if we look at the daily, we've taken out today's basically broken down lower, and we've broken down into this zone. this is hard to say which direction it's going to go today because of this relative extrema that is sticking out, which when this is sticking to the downside, any of these coming to the downside, this is essentially like a slingshot sort of pressure coming in to the upside. Now, I think we're going to have to see how today closes and see where this week closes, because that'll be a good determination about where things are going for Bitcoin over the next, especially into the monthly close. As it stands right now, this is looking very bearish. So I would expect maybe a little bit more downside, but we can go option F. We can see where we're at right now. Look at this. I just saw that. I just went from this low up to this high, option or alt F if you're on a PC. Mac is option F, and I took it from this low to this high, and this is right where we're bouncing, which I hadn't noticed before, right at this golden pocket. So if we're able to hold this, this could be a fake out to the downside, which this does look like an unhealthy move. So stand strong, stand firm. Let me know what you're feeling. Excuse me. Now we're going to do XRP. And then we're going to try to run through, we're going to do 2-minute technicals, as we used to call them when I was over with the Crypto Jeb team. So we're going to do XRP real quick. I may or may not have it. We're going to go ahead and completely remove drawings. We're going to do a super turbo, wrong one. We're going to do a super turbo TA session on XRP. We're going to do local zones. We're on the daily. We can kind of do it from this zone right here, option J for a horizontal ray. Now we're going to do this sort of region right here just because there's a lot of bounces. Option J for horizontal ray. Now we're going to go from this level. Option F for Fibonacci. We're going to go from right there all the way up to the top. Now we've already bounced off of this golden pocket, as we can see right here. So the problem with this is we have almost, I mean, there's kind of a very sideways head and shoulders that we have right here. I don't like super sideways head and shoulders, but they do play out sometimes, and it looks like this one kind of has. I mean, to the T. I mean, look at that. This is why understanding chart patterns is so good. If you guys like me to do an entire stream just on chart patterns, let me know. Throw it in the comments. But this played out exactly to where it's at. So this target has been met on this bearish pattern. We are flipping this EMA ribbon, but that's not too much of a concern because we have met this target. And I mean, this is almost to the T. It's crazy how this plays out. And this is also right on this golden pocket. We're having a lower high though right here, and the problem with this is this sort of not only came through and retested and broke down, but this, if we were to extend this line, this is showing that we got another rejection off this. So if this were to continue to the downside, man, I'm looking at levels. I'm looking at this level right here, option J, which is also in the golden pocket. This 37 cents. I'm looking at this if we continue to the downside. Now we're on the daily though, so let's go down to the 1 hour. We're going to just zoom in here and look at what some of this look at some of the narrative here. We don't have a low print yet. If we look at the TA, we're starting to get a blue formation here, which is expected because we're coming up into where the golden pocket is that we mapped out right here where this orange line is. But we also have a bullish divergence on the stochastics. But if we want to look more locally to really get an idea of what's going on, let's go to the, see if the momentum is starting. No, see, we're still getting these momentum, increasing momentum to the downside, pause, larger momentum to the downside. So I'm still looking for likely further downside target. I'm looking for this level here at 36.7 is where I'm looking here on XRP. If we were to come back up, I do think it's going to be, if we take this move, option F, all the way to where we went down to, we could go we could come all the way as high as 38.3 and still reject and can have a continuation of the downside. So it's looking a little bearish on XRP right now. I'm actually looking to, I've been eyeballing some levels for accumulation. And so I'm happy if we get a larger pullback. If we do lose this level, then of course I'm going to be looking down at 36 cents because that's the next low that we have right here. Now we're going to go over to Algorand. I've been accumulating a lot of Algorand. I haven't in the last month or so, but man, I was loving those levels it was at. We're going to do, let's do it. I'm going to do an exchange. I know I don't have charted. I'm going to look at KuCoin. So double click on the charts. We're on the, let's just start on the 2 hour. So we're gonna have our major level here, option J. I'm gonna turn off the BitLab market intelligence so it's clear to see option J there. Now we have another level right here. There's kind of a zone right here. So what I'm gonna do, so I was seeing that this, with my cursor, I can see that this level is kind of in line with a lot of this price action right here. So I'm going to kind of do it like that. This bounces off. This is also where we're getting rejections right here. This is Algorand. Looking at the 2 hour chart, and look at this. We got the lower high. When I see a lower high on a chart, I immediately start looking for what my downside strategy is. If I forgot to do that, because it should always be a part of your plan. I see that downside. I see this lower high, and so what I want to do immediately is first acknowledge that before this lower high happened, we were having the rounding top already forming, meaning that we're not having the. When you see a rounding top, when you see this, that there are higher highs, but there's less significance of the pumps that went into them. So because if you had equal pumps, you'd have basically a consistent diagonal up. But because we're having a weakening of the bullish momentum coming to the upside, that's how we're getting this rounding top, showing that there's already weakening bullish momentum coming into this. So now what we need to do, we're going to move this up here. This toolbar I have right here is just, if we look right here, the star area, if you press star, you can come over here press the little arrows next to each one of these. You can star the tools you like to use, and then you can turn on the toolbar and put it right near where you want to use it for some of the stuff, especially the stuff that doesn't have quick keys. So what we can do is we're going to look at, first off, the Fibonacci option F from the bottom here all the way to the top, which is this top we're looking at right here. And then we're also going to do a Fibonacci from this zone right here, because you can do multiple fibs, because you have different trend ranges in play based on the different fibs that you're doing. And as we can see, as it is right now zooming in on this, we have the price action has broken down, and we had a bit of a, let's zoom over. We had a bit of a head and shoulders right here as well. So we can see there's a little bit ugly because we had this fake out to the downside. But for the most part, this structure, left bullish impulse, higher bullish impulse, right shoulder, right bullish impulse, about the same height. And now what we do, and again, I don't like these sideways, but I'm seeing them play out a lot right now as the markets are choppy. So what we want to do is, if this were to play out, this gives us a target, down here below 24 cents. So we are right now, we pushed through the 25.6 level, which is a golden pocket on this move right here. And the bulls are trying to come in. We're on the 2 hour though. Let's go to the 24 minute and see. Okay, this was essentially once we lost this sort of neckline, once we lost this level, you see this, touch. This was a little ugly touch. As soon as we lost this level, price action just completely, there's a lot of basically sell orders, stop losses people had set, and basically short orders also that came in that just sent the market rocketing to the downside here on XRP. Scroll over. So looking at the actual indicators, okay, look at this. I love this BitLab hidden volume indicator because of this. By the way, if you're interested in any of these indicators, they tie together so many different things. I mean, from RSI to stochastics to money flow to momentum to divergences, all these indicators you're seeing are part of the indicator stack that you can get right here at bitlabacademy.com/indicators. And make sure that when you're here, you sign up for the newsletter, because you can get free content as well as voting on some of the content. Each newsletter, I'm letting people vote on some of the stuff that is in the daily streams here. So we can see we had a bearish money flow index right here. Bearish money flow divergence tied at the same time to 3 bearish divergences on hidden volume. This is saying, hey, not only is there not fuel in your car to continue the upside, we actually are siphoning fuel out of your car right now, and we've popped your tires. That's what you're seeing when you're getting 3 bearish divergences on the money flow right here, as well as, bearish divergences on the hidden volume right here. And in addition to that, having bearish divergence on the money flow. Okay, so we're seeing that, and we get a high print. You see these high and low prints? This is all these signals on this is part of the BitLab market intelligence. And so we're getting a concerted effort, other than And at the same point, we did have a blue on this very tight range we're in. But as soon as this went neutral, which is gray, as soon as this was neutral, then they're showing there's no underbought, undersold. There's no underbought sort of levels right here. The stochastics are not reset anymore. They tried to push up. They got neutral. There's no clear signal on this, so you can discount this entirely. And now you can see that you have a bearish div, which on money flow, which is a big bearish div. You don't want to see money coming out at the same time having volume coming out at the same time. At the same time, having your relative extrema sticking outside of it's not as far outside of this shaded wave, but it is outside. So these three things combined showed you that this was a good spot to potentially be getting out. In addition to that, we see the EMA ribbon that is right here coming across, and we're finding resistance, and all the divergences, all the signals, and rejection to the downside. So I am seeing right now on Algorand that we are holding relatively on right about this golden pocket, but we have pushed through it. So all eyes are going to be on the next 10 or 15 minutes as to what happens with this sort of retrace right now. Are we going to get back above this and continue back up? If we do, I'm looking for at least some resistance when we get back to 26. And if not, if we lose this level, let's go back out to the 1 hour. If we lose this level, then I'm looking for a fall down to about 24.5. And with that, I love you all. I appreciate you all. I got to run over to the BitBoy show now. I'm doing the TA over there. I really appreciate you all. I hope you like what you see. I hope you like our community, I should say. Join us. My name is Kelly Kellam. Thank you so much for being a part of the BitLab community. Make sure you follow all the socials that are right there. Hit bitlabacademy.com and join the newsletter. I really appreciate you all. Make sure you like, subscribe, join our community, be a part of us, ding that bell, be with us every day, Monday through Friday, 10:30 a.m. Eastern Standard Time. With that, I'll see you all later. I hope you all have a wonderful weekend. And with that, adios, muchachos. Thank you for coming. I hope to see you again. Adios, muchachos. Thank you for coming. Thank you for being our friend.